Jeff Hausfeld, retired surgeon turned biotech entrepreneur. Little that I know how difficult that transition was going to be. And in doing so, you learn that physicians are smart and they can make a good living in their practice, but when it comes time to innovation and commercializing their ideas, they need a little help. So myself and two other otolaryngologists started the society about 15 years ago, and we've grown to about 37,000 LinkedIn members with chapters throughout the world, mostly in the US, trying to get one set up in the UK. And we have one in Australia and other international ones. But it really is a platform to present your ideas in a safe environment with both physicians, PhDs, postdocs, and ancillary people within the field. And we're agnostic whether you're talking about biotech or medtech or diagnostics or AI. Everyone has to understand there's a journey to get your idea from your napkin to the patient. That's what we try to teach. I also, in doing that, met the CEO that I'm now co-managing the company in Frederick called Biofactura. It's a company that specializes in biodefense, biosimilars, and now we're spinning out a new division that is a contract manufacturer for other people who need biologics services and offerings. So I thank you for inviting me here today, all, and wish all the presenters very good luck.
Next up, we have Christina of Accorto. Christina Hazemer has been working with us in various capacities in the FDA regulatory space. Christina, can you tell us more about your group?
Absolutely. Podiums are usually my friend, so you can still fantastic. Hi, I'm Christina Hazemer. I'm with Accorto Regulatory Solutions. We are based out of Richmond. Can you hear me? Okay, perfect. Fantastic. So I am based out of Richmond, Virginia, with our full in-house regulatory team. We have 18 full-time members, and we offer full-service regulatory support for our clients in the Medtech and other FDA-regulated product spheres. We offer full-service support, everything from initial regulatory strategy through post-market surveillance and everything in between. If you do have an on-staff regulatory person who is struggling to keep up with the bandwidth, we completely understand. We specialize in small startup companies, so we can come in and assist, or we can offer full-service support on an a la carte basis. We also offer regulatory due diligence, so we can come in and analyze the regulatory process that you guys are currently analyzing, and we can come in and offer support or give our third-party validation that you're on the right track to help with the investment and fundraising process. In addition to our regulatory services, we also have a full network of clinical and non-clinical CROs, so if you're struggling to find the right person to develop the data for your application, we can come in and assist with that as well. Like I said, we're based out of Richmond, Virginia, so we're available whenever you need us. And Zoom is always a thing too, so any hour of the day, feel free to give us a call and we're happy to jump in. Thank you, and if you want to chat throughout the event, I am available.
Great. And I also want to have Tien come up. Tien? Thanks, and tell us more about Connectpreneur. I think everybody knows about Connectpreneur because it's the big thing here in this area, but I appreciate all the support you gave us. And with that, tell us more about your group.
Thanks, Paul. Whoa. Sorry, Tien Wong, Connectpreneur. We've had over 1,000 companies present in the last 14 years at our forums, and 3 are here today. We're also very happy to be sponsored by Anthony and next powered by Shulman Rogers, as well as Debbie with Buzzy Rocket, and Rich DePippo, who is a partner at NFP and also an angel investor. So yeah, we run 7 in-person events on the East Coast. We co-host 5 events on the West Coast. And we were doing monthly virtual events. We're going to do bi-monthly. So we want to make sure our headcount is higher. We're on connectpreneur.org. It's free to attend our virtual events. And we also have some great master classes. I want to plug Anthony because we have 250 people signed up for our master class on June 20th. He's going to talk about tips and tricks for raising money in this crazy environment. So we're looking forward to that, Anthony. And just great to be here, and it's great to be affiliated with Hall. And I'm on the board of the Austin, Texas Venture Association. Don't ask me how, but our buddy Carl Grant got me into that, but I know Hall's involved with that group too. But it's great to see everybody. Thanks for coming, and good luck to everybody.
So at this point, let's go ahead and bring up our presenters. I think our first one's going to be Rick Berger of Propel. You can come on up. Quicker. All right. Take 5 minutes, and I'll time you to the back.
So it's great to be here. Thank you, Paul. And this morning, you might wonder about my hat. One of our business partners and friends was wearing it, and it's like...
He took the hat off my head, literally.
But we are
You're the reason.
in what we're doing. And one of the things I want to highlight is our team and the fact that we have done this 3 other times. And for me, I'm a 20-year serial entrepreneur. And the saying that if you do what you love, you don't work a day in your life is really true. If you can inspire others that we all consider ourselves ordinary, hardworking people to do extraordinary things, I think that's been a hallmark of what we've accomplished. And we love, all of us, as you can see, to build, create, and innovate. And still, we have a 3-year plan. What we do, I want to share a little bit of that. Let's see. Quickly. So we are an asset management firm, and what does that mean? We mobile assets, trucks, trailers, sensor monitoring, temperature, how the driver's doing, HVAC service vans. Picture in the life cycle of the supply chain, you've got the supply of wide area trailer truck going to a local depot, last mile delivery, service vans, HVAC are in that category. And then you go to the building where they take it depot to back loading dock, and somewhere in the hospital, they might take critical medical equipment, and a lot of times they can't find it when they need it, and that happens more than we realize. And the answer is to go rent more or go buy more, and it's woefully inefficient. So we come in and use technology. Our base case bread and butter has been put food on the table, do GPS tracking. You know, it's not going away. People need to know where critical assets are and how my driver's doing. But on top of that, take our patented platform and enable AI so that the SMB customer base of which we focus, as you can see, is 2.2 trillion. They're 80% of that. So we're an SMB ourselves. The SMBs represent 80% of the economic engine of this country. And right now, they're freaking out because they don't have the IT spend to keep up with AI. They hear things like, if you don't have AI integrated into your business in the next 5 years, you're going to be out of business. And if I talk to Tien and ask him that, he says it's 2 years, Greg. It's moving quicker. And that, I think, is really true. So if we can come in and offer a better price point and help them be more competitive against the larger firms, we've done some good. Not just for them, but for the country and for our investors. So let's talk about that for a moment. One of the things, you heard me say we've done this 3 other times, and we've overcome one company here in the area that we were brought in to help fix it, and the founders had sold stock for $20 a share. And when the VCs came in, they said, I don't think so. It's $1.50. So we had to turn that around. We had to take 46 people down to 26, a burn rate of $1 million a month, and create an Inc. 500 Deloitte #1 Virginia fast-growing company that became very profitable and cash flow positive. And as you look at this, we want to help the customer, but I also have as a goal to make 10 millionaires of the employees. The culture that you create is tantamount to the success that you reap and generate for your customers. And so it's take care of the customer, take care of the employee in an extraordinary way, and take care of the investors on a 1 million, 1.5 million increase in revenue we created after the pandemic, and we made money. Our plan is in 3 years to be a 15, 20 million revenue company and make money each successive year. How unique and novel is that for a tech company to do that? And at the end of the day, investors have a very strong potential to make 5X. So 3 things I want to leave you with as we close. And they're key ingredients that we feel for entrepreneurial success. You've got to prove the economic model. The craft saying, do the dogs eat the dog food? You know, are you doing something they need and want? Absolutely. If you don't do it, you're not competitive and you're out of business. The experienced board and team that we've got federal, commercial, international, U.S. domestic, satellite, and cellular experience. And we've done it a few times before. And then lastly, the right amount of capital. We've actually had some very smart people say, how in the heck are you going to raise $3.5 million and get this done in 3 years and be that kind of valuable company at $100+ million? We've done it 3 other times. The incentive that we're giving to the employees, trying to make them millionaires, is one huge incentive. And the experience and partners are another strong feature. Thank you.
Thanks. Next up is Auravax.
Good afternoon, everybody. My name is Joseph Sullivan. I'm the CEO of Auravax. I want to thank you all for taking the time to learn about our core technology, NanoSting. And I want to thank Paul and his team for organizing this meeting. Here we go. NanoSting is an antiviral for treating and preventing respiratory viruses. Think in terms of influenza, coronaviruses, RSV. Our mechanism of action, we're a host-directed therapeutic. So we actually cover all of those pathogens, including their variants. So we're not focused on the virus, we're focused on improving your response to the virus, and that's how we work. The advantages, like I said first, is it's broad acting. So we're effective or active against seasonal viruses, as well as potentially some of the emerging viruses. And the military is also looking at us for biothreats. The second is that the portion of the immune system that we're working or targeting is the innate immunity. And we have shown in animal models that that still stays fairly viable with our approach for immunosuppressed patients as well as older patients and those with comorbidities. So the second benefit is that we're focusing on the higher risk patients for respiratory viruses. And third, it's intranasally delivered. So not only are we focusing on the site of the infection, but hopefully we'll be hitting the virus down in a certain way so that we can minimize the transmission of the virus to other potential folks in the community. Oops. Very, very briefly, in 5 different animal models with about 7+ different pathogens, we've shown that we can deliver NanoSting safely to the animals. We can initiate the immune response we're looking for, and we can show that it's efficacious in terms of reducing the signs and symptoms of disease from the pathogen. All of the data that we have, we've been publishing. We've had it in a number of different publications. Here's just one example of the data that we have. In this example, we show that we can use NanoSting to prevent, to treat, and we compared that to Tamiflu. The same mechanism of action is that we use for treatment can actually also be used as an adjuvant for intranasal vaccines. So we're focusing as a second opportunity with NanoSting as a mucosal adjuvant for intranasal vaccines, and we have actually now 5 or 6 companies that want to work with us here. We don't want to be a vaccine company, but it's another opportunity to monetize the platform. With that background science, we've been focusing on a number of partnerships. We're now working with the Gates Foundation, the military. We have actually a contract with BARDA, and we're also working with the Novo Nordisk Foundation that they set up for vaccines. And this will allow us not only to do better larger animal studies, but also get into clinical development. Very briefly, in terms of the go-to-market strategy, it's a very, very large market that we're focusing on. We're very interested in the dual use. We have met with the FDA. We had a pre-IND meeting, so we have a clear line of sight to get into the clinic. And we're very, very focused on accelerating the monetization of the platform. So we're hoping next year actually to have a commercial partner for the adjuvant, and soon thereafter we hope to be working under contract with the Defense Department for biothreats. We have a wonderful team, a very experienced team, both in terms of science as well as industry. And so in closing, I just want to say thank you very much for listening to the presentation about Auravax, and I hope to talk to you later. Thank you.
Next up, we have Worldtree. Come on up. Right? Yeah. Here's your clicker.
Thank you, Hall. There we go. Good afternoon, everybody. I'm Doug Wilmore, the CEO of Worldtree. Worldtree is disrupting a $170 billion hardwood market in North America. We are commercializing the fastest growing hardwood tree in the world here in North America. Very friendly, non-invasive, benign, but we get a fully grown tree in 10 years. We need a new species because we have increasing deforestation, we have greater demand on lumber, and we have climate change shortages that are popping up in supply chains more and more and more. And at the same time, we don't grow trees fast enough. Most hardwood species take 25, 30, 40, even 50 years to grow. So our solution, the Empress Splendor tree, the botanical name is Paulownia, again, very benign, non-invasive, friendly. That tree you see on the right is 10 years old in Tennessee. So you get a fully mature, 60-foot tall tree, 18 to 20 inches in diameter that produces really, really high-quality finished lumber. Think veneers for this column or for the table. It's that quality of wood. And so Bloomberg called this tree the most efficient carbon capture technology on the planet. It sequesters carbon at 4 times the rate of any other tree because it grows so fast. It's also, again, non-invasive. The final thing that makes it so amazing is it regenerates from the stump after you harvest it. So we don't need to replant. It will do that for 5 generations before you need to replant. These are some samples of wood that comes out of this tree, really beautiful. We're selling into those markets on the left. We have customers like Fender Guitars, Gibson Guitars, Bunsen Boats, an electric boat manufacturer. The single biggest issue we have in the market right now is not enough supply. Incredible demand, and most of these manufacturers have threats in their supply chain because of shortages. They're looking for something like this. The pricing right now is above what we've modeled, and it's really just pricing replacing the wood that they're using right now. So again, it's a $170 billion wholesale value of this market. We have seen no significant competition at this point because we're focused on shortages that are there. You can see the samples that we go through. We're selling directly to manufacturers. I've mentioned a few of those. And this is where we're at right now. So one of the unique things about investing in an early stage company, it's very rare that you're investing in an asset base like this. We've raised $17 million of non-dilutive capital to plant trees. We have more than $300 million of lumber assets in the ground right now. We start our first harvest of our farms next year. Worldtree will be EBITDA positive next year and growing substantially over the coming years. We have more than 45,000 acres in our pipeline. So 9 years of R&D, that's an 8-month-old tree in Costa Rica. So we're getting higher performance out of this species than anyone on the planet. And it's 9 years of R&D that we own. No one else in North America If someone else wanted to get into this business, they would have to do this same kind of R&D and create their own IP. So this is the pipeline we have. We're raising capital to be able to develop large projects. This is how we scale. Our goal really is to go from 7,000 acres to 50,000 acres over the next 3 or 4 years. That's partnering with large corporates who want to invest in projects like this. Their feedback is, you need projects that total $100 million of investment. That's what we'll do. That's Shell and Nestle and Goldman Sachs and people like that. So the project we're creating, this is an example of one in Costa Rica. They're not monoculture. We have several revenue streams. We create biodiversity credits because we have multiple crops and trees. And this is what Worldtree looks like just from the assets in the ground right now. So no new revenue from anyone else. These are lumber assets that are already in the ground that someone is investing into. And so finally, we've got a really great team. I've done this before. I've got a successful exit in the healthcare industry. Our board does as well. And our executive team is really built to scale and to be able to grow this out. With that, thank you very much. We really appreciate it. I'd love to talk to anyone who has more interest.
Great. Thanks, Tom. Our final presenter, Edward, coming up from Combat Medical. Well, with after this, we'll place the founders in different parts around the room and have the investors circle through.
Dopple.
Thank you very much for having me up. My name's Ed Bruce White. I'm CEO and co-founder of Combat Medical. I've come over from the UK for this presentation, so jet lag's not too bad at the moment. So if I fall asleep, it's nothing to do with you. Combat is about delivering hypothermic therapy. What we do is we're able to deliver hypothermic chemotherapy that is considerably more effective. When I mean more effective, we've shown in clinical trials, phase 1, phase 2, real-world registries were approved in Europe, 1,000 treatments. We've been able to show us 50% improvement compared with best approved FDA drugs or about to be approved drugs. We're profitable. I'll tell you about our profit in a minute in terms of what we're doing. We've already raised $20 million to date, and we've got $5 million in this round. And we've raised $2.7 million. Sorry, we raised 2.7, we're looking to raise a balance of 2.3 million. What are we talking about? We're focusing today on bladder cancer, how we're transforming into how to find effective, affordable, and tolerable treatments. So we've got 4.3 million in sales, 700,000 EBITDA in 24. We've done over 100,000 treatments, mainly across universities in Europe. We're sold in 35 countries, with over 40 publications, all from universities as well. We've got strong patents and IP that's already being registered, granted in the US, and we're the only company that's been able to deliver hypothermic chemotherapy effectively. It's a platform technology. We've got 2 CE-approved devices, one for bladder cancer on the left and one for peritoneal cancer that are already in the market. $4 million to innovate UK government funding. We've actually completed 2 more, one for ovarian cancer and one for colorectal cancer. And I was with Paul Sugarbaker, who's the founder, who's the inventor of high-tech, who's one of our, who actually invented high-tech last night, and we went out for dinner, and he's been working with us on the project. What we're here today is to raise money for our FDA trial. It's a $7 million FDA trial that we're running in the UK. We need $5 million of that to be able to pay for it. Our business is profitable, so we can cover the rest of it. In terms of the treatment, it's done in an outpatient setting. Patients catheterized, and then we deliver the chemotherapy intravasively. We perfuse the organ, and it's targeted, so it means there's no side effects, no systemic effects, and because our provision exchanges are able to deliver a very precise temperature. With Duke University, we're able to prove that we could deliver within the target temperature of the organ that we're looking at, 0.14 of a degree target, which is very important to make it effective. We're able to distribute the drugs. We've got IP about how we're able to do that. And it's very user-friendly. Like I say, we're in 350 hospitals already across Europe. We had 20 patients actually at Duke University in the US when we got an IND when there was a drug shortage. And it can be used with multiple drugs. So hypothermia. Why hypothermia? Well, good cells can't manage heat much better than cancer cells. Cancer cells get stressed at 106 Fahrenheit chemotherapy, it's more effective. This has been shown, the science behind that. And eventually, obviously, it kills and demises the actual cancer itself. Got excellent clinical data behind us, showing actually in the same FDA trial that we're showing a 69.5% complete response rate. In another trial, exactly the same group from Cologne University, 67. So consistent results showing the results that we have to be able to achieve. We've been recommended by the most powerful group of neurologists in the bladder cancer group to use hypothermia as an alternative when to spare people's bladders. And in terms of the value of the market, you've got all these big players. Merck have been in there with their PDR1, but they failed in bladder cancer. They've got 19% complete response rate. Ferring have done licensing deals off the back of their product that's only got a 24% complete response rate. Community Bio listed, $2 billion market cap, 36% complete response rate. These are all published results, and our results, again, are 70% market. J&J, who we're active discussions with, got 44% complete response rate, looking to achieve about $5 billion in sales. So the potential of this market is enormous, and it's very real. And this is just the bladder, which is actually the smallest of the indications that we're looking at. In terms of, in terms of the crux, because we're running out of time now. We've got a $7 million FDA trial. We've had this reviewed by the FDA. We've had 3 meetings with the FDA, and it's been led by a gentleman called Jonathan Jarrow. Jonathan Jarrow was the ex-chief medical officer who set out this indication. So he's now advising us and having the discussions. We're able to run this trial, which means it's a $7 million trial, opposed to most probably a $70 million trial in the US. And we're about to start recruiting. We've had the first 2 sites initiated in the UK, and we'll be recruiting patients any moment now. 25 hospitals, all of them universities that are already using our products in the UK. And we expect to have the first interim data at the end of 26. CD Oncology listed in January 24, $1.8 billion with 66 patients with worse data than we're going to have. So that gives you an idea of the market in terms of the value. We've got a business model, which I'll be able to go through you with in a minute. I just want to be able to get to the last slide. For the management team, both me and my business partner has been successful. We've already set up and established over 10 products and taken them to market. We've got a track record of doing big deals and taking over distribution and products from companies like Medtronic, which are global players. Our clinical advisory board reads like the who's who of bladder cancer, like ourselves. I actually went to dinner with Paul Shulman that invented high-tech procedure last night in Washington D.C. Space Station. So I'm just going to jump to the end in terms of what we're doing. We're asking for $20 million, which we've raised $20 million. We're looking to raise $5 million, of which we've got 2.7 committed, and we need 2.3 more to be able to take it to market. That's all to be used for the FDA trial. We're profitable, and we already pay for our own day-to-day working. We're in discussions with Johnson & Johnson, Boston Scientific, so potentially we could almost have a trade sale in 2027 of the bladder business. Full platform technology, so the multiple products that we'll be able to leverage.
And we do have one more presenter, Lisa Marino of Dopple, and after that, we'll set her around the room. Lisa?
All right, I have one window.
Just keep forwarding, we'll get to the Dopple slides in a second.
There we go. All right, everybody, welcome. My name is Lisa Marino, and I am the CEO of Dopple. My company is really reimagining family funding. The fintech platform we've developed is turning family financial support into a very profitable and scalable business that we're extremely excited about. So what's the problem we're solving? Today, it costs at least $25,000 to have a kid, and that doesn't even include hospital fees. The problem is existing registries, so think BabyList or, BabyList is a big one. They only cover the hard goods, so strollers and car seats, and that's only about 20% of the total budget that you need to fund having a child. The rest of the money is paid out of pocket by families from people who, 2/3 of which are struggling and then they're living paycheck to paycheck. They're struggling just to pay for diapers and for daycare. Moreover, you've got billions of dollars at the federal and philanthropic levels going unused that are specifically earmarked for these families. And so, as somebody who was on welfare when I had my first child, I can tell you how difficult it is to find these dollars and then actually go and apply and secure them. So our platform looks to solve a lot of these issues. It's the Dopple funding platform. We take gifting and we provide families, and we use it to provide families with real financial support. So think helping to pay for medical bills, college savings accounts, daycare, diapers, anything that a family needs. We make funding those initiatives seamless and accessible. We start by having a family fill out their budget for the next 12 months, particularly for a birth. Then our AI engine goes through and matches the needs of that family with different funding sources. It could be government dollars, it could be philanthropic dollars, it could be friends and family. We then present to them what a budget would look like from these different funding sources, including from their friends and family, and what their out-of-pocket bills will be. We have a very sticky platform because many of these challenges for families are persistent over time. So there's a reason to constantly come back, for example, to get your daycare funded. Let's talk about our momentum. A few things. One, we've got a real business. We did $1 million in revenue in 2024, and we're pacing to $2 million this year. Second, this funding round is really focused on proving out the multi-source funding strategy in the back half of this year and first half of 2026. On that note, we just signed this week a partnership with the Starlight Group. They will help provide part of the engine for federal and philanthropic dollar funding pre-qualification. So that's really exciting for us. Last, by the end of this month, we will close $500,000 from the state of New Jersey. And that partnership is super exciting for us on two levels. One, New Jersey will be a funding source in the go forward as we raise our Series A, given the various programs that they have. And then second, it gives us access to families via 30 different hospital systems and birth workers supporting those families as well. How do we make money? We basically double-side transactions like any marketplace does. So a donor or a gifter comes in and we take 5 to 7% of the transaction. And then on the back end, when we actually pay the daycare center, we buy the stroller, we get an affiliate fee, and that's 3 to 5% as well. The family never pays unless they want to. Our cost of customer acquisition is very low at $150 per. That's because we're partnering with the birth workers who bring us the families. In year one alone, our return on investment just from our customer acquisition cost is 6x. And if a family stays with us until their kid's out of the house, that could be over 100x. From a TAM perspective, there's 34 million families in the US who've got kids under 18 years old. And at $900 per transaction revenue per family that enters the system, we have a TAM of over $26 billion. By 2030, we're looking at roughly $140 million of revenue on 136,000 families. That's less than 0.5% of market penetration. To frame that for you, Babylist has over 1.5 million families they serve each year simply on the Stuff Registry. Team, we've been together for 13 years. We scaled Rocky from 15 million to 150 million, sold it in 2018. My most recent company I sold to McClatchy Media in January of 2024, and they're the lead investor in this round. As a team, our expertise is product development, e-commerce tuning, and the mall market in general. The ask, $1.2 million, and that's going to be between angels and a refunder round. And the terms are a $7 million pre-money valuation, 1x preferred. Use of funds will be 50% will be enhancing the platform, and the rest is going to onboarding birth workers / service providers, as well as supporting families in the system. Thank you.
Okay, now comes the time where we're going to pass this over to Raquel, who's going to help place the startups around the room. we have enough investors for about 2 per station. So once we get them in place, we'll have 2 investors at each one. Every 10 minutes, we'll have you rotate to the next one. We'll go in a counterclockwise fashion. Rocky?
Okay, I'll have Propel over here.